Hello everyone. Last Friday, Nifty had a mega short covering. So now the most important thing to understand is that short covering over or we might have some more. So in this video, let's discuss those first and then we'll discuss our regular pre-market report for today, 25th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Without delay, let's get started. First of all, we need to understand one very simple thing about the Indian market. In the long run, Indian market tends to align with fundamentals, Indian economy, geopolitics and global cues. However, for the short term, for most of the time, it always aligns with whoever controls the derivative market. Here, based on my experience on analyzing the pre-market for 2.5 years, I personally believe it is controlled by 50 odd proprietary traders and 50 odd FII. I don't have any official data for proprietary traders numbers, but for FII, based on NSE information and applying some statistical principle, we can confidently say there are roughly 50 odd powerful money-rich FII in the Indian derivative market. And I won't be surprised even if those 50 proprietary traders and 50 FII are having a common WhatsApp group. Anyway, the point is, I don't have any proof for this claim. It may be a conspiracy theory as well, but based on my observation, always market expires in favor of them. On that basis only, on Thursday morning pre-market video, I said this statement that I won't expect the short covering based on exit poll, rather expecting a short covering on Friday, because at that time both FII and proprietary traders have huge short position in index future market as well as on the option market. So if short covering happened on Thursday means then none of those people might made money, hence they want the market to close negative. I mean, some might say on Thursday, Indian market was down due to Adani issue, etc. It may be, but the prior was my opinion. Now, you might ask me, Shara, that was done and dusted. What's next? Let me answer that in a usual way. Like, I won't say it will go up or go down. It might go up or it might go down. Honestly, I have no means of prediction. But this is what the data is telling now. If required, please pause and have a look. Overall, index future open interest dropped 4% and Nifty rallied over 2%. So, very clear. Even from technical Investopedia definition also, it's a short covering, no doubt. If we see who did that, it's mainly FII as they increased their long position from 25% on Thursday end to 31%, which is clearly a significant jump. However, on the negative side, still they are holding 69% short position, which is really massive. And proprietary traders wise, at the end of Friday, they are also holding higher short position, 67%. Hence, as per future market as of now, it might change at the end of today, but based on Friday end, both proprietary traders and FII will make money only if market expires negative side. Now coming to the option market, if required, please pause and have a look. Based on volume and open interest data, I derived this formula. The more percentage on the side where the respective participant makes money if market closes on that side. So for the moment in the option market, because of Friday short covering, proprietary traders changed their stance to bullish as they sold lot of put options. All those details I added in the community page, please refer that. Because retail difference is below 2%, let's say they want the market to be range bound. On the contrary, FII wants the market to go down. And as we discussed in the option market, proprietary traders wants the market to go up. Always remember this, generally FII makes money from index future market and proprietary traders makes money from option market, and not exactly, but most of the time proprietary traders adjust their position in the morning and FII adjust in the afternoon. Again, as I said, their stance can change anytime. Both proprietary traders and FII got lot of money, hence they can adjust their position anytime. But at present, this is the overall status. Retail people wants the market to go up on future market and range bound in the option market. At the same time, FII will make money in both the case if market goes down. Finally, looks like proprietary traders having a balanced position. I hope I confused more, but to be honest, stock market is the brutal numbers game. So I personally think we need to understand all the numbers whatever we have before doing the trading. Then about institution activities in the cash market on Friday, again FII was net sellers. They net sold the shares for near 1300 crore rupees, but DAA net bought for 1700 crore rupees. Here please note, very important, today is MSCI index rebalancing implementation day. So finally let's hope today FII might possibly turn out to be net buyers. I know HDFC Bank weightage increased, but I'm not sure about other stock weightage. But overall, I'm guessing today MSCI index rebalancing results in fund inflow, and because of that, maybe FII might be net buyers finally in the cash market. Then coming to US, last Friday, US PMI data comes very strong, especially service sector, which increased significantly. Because US market is predominantly based on service sector, hence all three US major index increased. Dow Jones increased around 1%, whereas S&P 500 and Nasdaq underperformed and increased below 0.5%. In case of VIX, it almost crashed 10% and dropped to around 15%. In line with that, on Saturday morning, GIFT Nifty also increased and closed at 24,043. Now, equating that with the spot Nifty, it's indicating the gap up opening of around 100 points. And among ADR also, all closed further positive of around 1%. And at the end of Friday, except Reliance GDR, all the other four major stocks got the positive arbitrage difference of 1 to 2%. Only Reliance GDR got the negative arbitrage of 0.5%. As a summary, US market closed positive, so global momentum improved. In line with that, GIFT Nifty and ADR all indicating the gap up opening of over 100 points. In addition, in Maharashtra election, BJP alliance won comfortably and continuing the government, which is positive for the market. And also in the options market, propriety traders changed their stance to market to go up. So all indicating further positiveness in the market, but the short position in the index future market is little bit worry. And also if both propriety traders and FII aligned in the same direction, means we can say most probably weekly expiry will happen on that side, but the present divergent signal is confusing. Then regarding the things to look out, at 2:30 p.m. November month Germany's business climate index is due to release. Then in the night, December month rate cut probability and 2-year note auction are some of the items we need to keep an eye out today. Coming to technical, last Friday Nifty opened a 60 points gap up and was increasing throughout the session. Then it climbed decisively above the 200-day exponential moving average and closed above 23,900. Thus on the daily chart, Nifty formed a long bullish candlestick pattern with higher high, higher low formation. So basically Nifty had a breakout, and in addition RSI indicator had a bullish crossover from near the oversold zone, all indicating the continuation of the positive momentum. However, one negative thing, still Nifty is trading in the lower Bollinger Band. Hence, for the short term, sentiment appears positive as long as it trades above 200-day simple moving average 23,600, and the sentiment can change below 23,600 mark. For now, the immediate resistance is at 24,050. If Nifty managed to sustain above 24,050 mark, then the rally can extend towards 24,200 to 24,300 level. In case of Bank Nifty, it opened 140 points gap up and sustained above 50% Fibonacci retracement, then successfully closed above 51,000. Thus on the daily chart, similar to Nifty, Bank Nifty also formed a long bullish candlestick pattern after consistently defending the 200-day exponential moving average on a closing basis in the past 3-4 sessions. Bank Nifty continued higher high, higher low formation, additionally tested the middle Bollinger Band, and also RSI indicator is having a positive crossover. So if Bank Nifty managed to hold 51,000, then most probably rally could extend towards 51,500. On the options front, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,000, with maximum new call option rating at 23,900 strike, then 24,600 and 25,000. On the put side, the maximum open interest was at 23,500 strike, followed by 23,000 and 23,400, with maximum new put option rating at 23,500 strike, then 23,600 and 23,900. Thus, from options data, 24,000 is expected to be the a immediate resistance, followed by 24,500 as a crucial hurdle, while support is at 23,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.